What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're going to be talking a little bit about Chipotle Mexican Grill, ticker CMG. So now in this new format that we've got here, I've got my chat window up over here. So, I'll be chatting with you guys. Danny, I already see you. What's up, buddy? How are you? There's a little bit of a delay from the time I say something to the time you guys hear it. So bear with me. Sometimes it happens, but I will be responding to the chat live as it pops up on my window. Any housekeeping for the week? No, I just sent out our email. We're doing a lot of stuff this week. Probably more than I should, to be honest with you. But that's okay, right? I pretty much load up. It's funny because oh my God, it is Taco Tuesday. I load up I basically make my own schedule, and for some reason I load it up with all this extra stuff to do just because honestly it's fun. I like doing it. And that's what's up, man. So we've got Chipotle today, PayPal tomorrow, Amazon and Starbucks on Thursday. Also going to do the GBU on Thursday. And then Apple on Friday. Also going to do the morning after, because Thursday after the close, we've got Amazon and Starbucks. So I think it'll be good to do Friday morning, a little bit of Apple action. So that'll be good. And you're right, it is Taco Tuesday. And how better to kick off this Taco Tuesday than to talk about a place that makes giant burritos. I guess you can get tacos from there too. I never get tacos from Chipotle though. I only get the burrito. Most of the time, actually the burrito bowl specifically. And I do that trick where I ask for half chicken and half steak to get more Chipotle. And apparently there's a trick that if you go there and say it's your first time ever at Chipotle, that they will pay for your burrito. Little known trick there. You guys should try it today. Let me know if it works. All right, so let's go ahead elbow deep here into Chipotle. So if you guys remember, well, first let's go here. Black line, the price corresponds to the right y-axis. The red arrows are earnings misses. The green arrows are earnings beats. These multicolored lines represent the evolution of our Zacks consensus estimates over time. This is what I love about the Zacks consensus, right? You could look at this chart and see these nice moves, and then can anybody tell me where it went south for Chipotle? Right? This is the burrito death. So you remember they were having the problem where people were getting sick on their burritos? That happened right here, and then estimates just plummeted after that, and of course the stock did too. But look at where these came crashing all the way down to. I'm going to get happy with. I'm using a lot of this today, by the way. I'm draw happy today. But so estimates came all the way down to this is $2 when they were $20. Let that sink in there for a second. So you're talking a tenth, right? But we didn't dip a tenth of the stock price though, right? So that's important to note. Other thing is important to note is after this dip, shares have troughed a little bit, and earnings hopefully have troughed a little bit, right? Now here's something important to note is they've always had this sort of gap in between 2017 and 2016, right? This gap between the earnings that they feel this is the growth, right? There's growth here, there's growth here, there's growth here, and there's always supposed to be growth here, right? But had they delivered? Because look at where estimates were for 2014 in the beginning. You're talking $14 a share, or 2017 rather. In the beginning, you're talking $14 a share. Today, talking $8, right? So that's since been slashed as this number has come down. So we've got to decide on this earnings front what we think about this, right? How do we feel about it? I don't know. Could it be rounding the corner? Let's look at the Zacks rankiness. So we'll go back to this surprise model later. Let's talk some Zacks rank. Because just based on that price consensus CPS surprise chart, doesn't really tell us. This tells a pretty good story, though. Ones and twos, and then the estimates start coming down. They've been in the gutter here. They've been a sell basically all of 2016. And even in the first quarter, we were still saying that there's Zach's rank number 4 sell or number 5 strong sell during that period of time. So still some very bearish behavior there from analysts regarding Chipotle, right? So they didn't really feel it was turning the corner yet. But recently, it looks like it has a little bit. Now, what does that look like on the technical chart? It looks very similar, where you have, this is the 50-day moving average, so I like to use this as sort of an intermediate term moving average that kind of tells me where the stock's heading in the short run, or in the intermediate term, rather. And you'll see, really it's this year, where it gets above, finds support, dips below again, but that's, we saw those revisions, those estimates coming down. Another wrinkle I'm going to start using here a lot, guys, and that's the Chaikin money flow. So what this indicator does is this attempts to show the buying and or selling pressure based on the move and the volume on that particular day, right? And sort of where in the candle it's been closing. I don't want to get too far into this thing because, you start going down a rabbit hole, getting all technical, and then everybody's eyes just kind of glaze over. Here's the way to interpret this. Is values under 0 represent selling pressure, values above 0 represent buying pressure. You want to look for divergence between what's happening with this indicator and what's happening in the stock chart. So what I mean by that is, here you've got the stock coming down, or rather the money flow coming down negative while the stock was going up. That sort of divergence, or the difference between the two of them, lends itself to basically saying that this rally is going to run out of gas. And it did, right? Because the selling pressure eventually mounted. Now a little bit of buying pressure here is kind of confirmed with what we have going on here. So I've been trying to use this in conjunction with my more sort of price-driven commodity channel index to kind of filter through, some of the false signals that you might get, right? So it's something I've been incorporating recently. Wanted to start sharing it with people since a lot of what I do is kind of volume-based anyway. So I've got my horizontal volume histogram here to show key levels of support and resistance that way. So it all kind of comes into play a little bit, right? But when we are looking at Chipotle, let's see if we've got any big fibs here. So you had originally this fib, retraces to the 38, and then comes down. So this fib is broken now. Probably have a new fib, and that's this. This is a smaller fib, and of course we're trading right there at that resistance level. CCI has come from overbought to creep down a little bit, and now this buying pressure is starting to subside. So from a technical perspective, guys, running out of steam a little bit here on Chipotle. Now, that doesn't mean that this thing can't surge higher, okay? But I'm just saying, technically, a little long in the tooth. The rally looks a little tired. So, I don't know. You do have this 50-day moving average down at 430. Seems like a long way off, but is it really that far off? Let's see what our top secret G14 classified metrics have to say about this. Let's look at the consolidated surprise here on my ZRS. And here you'll see the how the stock has moved over the course of the last several quarters. Last quarter, kind of a dud. Lost $16, or negative 3%. Look at September. Moves $45. I mean, holy smokes. Which was 11%. June, 5%, negative 5%, negative 2, negative 7. And if you go back further, I mean, you've got plenty of big moves. So, expecting a big move out of Chipotle? I think so. right? And how have the surprises been? Really, surprise to the upside, big miss, big beat. Stock even going down on these big beats must be a revenue issue. Let's look at the revenues. Small downside surprise in revenue, stock goes down. Bad revenue, stock really gets crushed. Bad revenue here wasn't too bad. Bad revenue, stock gets crushed. Bad revenue. So I don't know. I don't know what the story is here for Chipotle when we're looking at that. A little bit of murky water. Murky water is good, though, because that typically means that there's opinions out there that can slap this thing around in either direction. And ultimately, we kind of do want it to move, right? All right. I'm going to zoom out of this one here. There we go. So we've got it as Zach's rank at number 3. Hold right now. Value style score of F. That's interesting. Growth C, momentum of A. So they got a little bit of momentum. Again, these guys are reporting just after the bell today. They're trading 57 times earnings right now. So they better get back on the horse and have some growth. And let's see what that growth is going to look like for them. 26% quarter over quarter or year over year revenue growth for the current quarter. 18.49 next year or next quarter. Current year number looks like 1769. Next year 12.48. The EPS growth is where it's at though, right? These are big, huge numbers on EPS. 245%, 188%, 960% here. That must have been ugly. Look at that. A year ago, down to 77 cents for that quarter for the current year. Wow. It was a bad year last year. Recently, what's been happening, this is interesting. You don't normally see this. An analyst coming out in a week before earnings, increasing the estimates for the current quarter. 2 of them coming out and dropping their numbers for the current quarter. Next quarter number, 2 to the upside, 1 to the downside. 1 to the upside, 1 to the downside. 1 to the downside for next year's numbers. What's the overall impact to our Zach's consensus estimates? Well, current quarter's gone from $1.29 to $1.32 to $1.30 to $1.28. So basically right around the same level. Next quarter from $2.57 to $2.47 to $2.52 to $2.50 to $2.51. All over the place. Still 250s. Current year $8.86 down to $8.16. Next year $12.79 down to $11.90. Okay? So just when you think downside estimates are done, they come in again, right? Again, we have this. Upside here, don't worry about that. The surprises, we already talked about these little small surprises, okay? Let's go ahead and dig in to some options chains, my friends. Here's a quick question. Guys. When's the last time you ate at Chipotle? That's the poll question for the day. I want to know how long ago. And I don't mean like 4 p.m., right? Like yesterday, it's been months. You know, you swore it off after their little scandal. When's the last time you guys ate Chipotle? Me personally, let's see. Probably December for me, I think. Probably December. Yeah, I don't go out for lunch much anymore. Kind of spoiled. I'll eat at home. When I do go for lunch, Chipotle, it takes a while for me to get to Chipotle because it's over in Aventura. There's a Subway right here, though. I just walk over to Subway. Okay, back to the task at hand. 470s on Chipotle. 470s. Year, 18 months, 2 months. Yeah, see? I bet you if I asked that question a couple years ago, that a lot more people would have been like, oh, yeah, last week, or last month. Now it's a lot like, ooh, a year ago. More than a year, I've noticed that. I thought that was just a fat boy in me that was getting mad about the portions. But I think they have cut their proportion. Definitely. Definitely cut the portions on me. And they used to be great because it was so big, and then now they're cutting back. Yeah, they think they're sneaky, you know? They think they're sneaky. All right, let's do the math here for the implied volatility. So the 470 call is 1330 by 1390. Let's call that 1360. 470 put, 1230 by 1270. We'll call that 1250. Add it up. The market's expecting a $26 move at 470. You're talking 5.5% is what they are pricing in. 5% is what they're pricing in, right? Back to this little calendar, and there's been some 5%ers, 10%, yeah. Now, granted, this is a market that's been moving a lot, right? We're breaking out again to the upside today. We're just looking for reasons to rally. And part of that rally here was McDonald's, right? Okay, so 5%, right? I agree, Chris. Subway is pretty terrible. But let me tell you, when you can get a sub, like a foot long, for like $6, it's worth it, okay? Plus, I literally, I walk right around the corner. It's not far. There's no other sandwich places. The Jimmy John's is too far. There's no Potbellies down here. I'm struggling a little bit, to be honest with you. That's why most of the time I just eat at home. Okay. $26 is what we're expecting. I'm going to tell you right now, I'm not messing around with this front week, okay? Let's go to May. $26 what we're looking at. Set of the side by side. Let's go. Stacked. Let's go. Okay. Let's get vertical, my friends. So, bullish. We can anchor with this 470. What did we say the upside was? Basically $25. I've got to move this little options chain so we can see this a little better, guys. All right. So 470. There we go. And that basically brings us all the way down to here, right? $4.95. Wow. I want to go back to the chart real quick. See what that even looks like. $4.95s. Well, I guess that's not that unreasonable. I just kind of want to see where it was, what some of these levels are. So the levels to look out for, we could draw our fib again. I don't know where the fib went. I must have deleted it. I'm not paying attention here. Since we're right on it, let's draw the 76.4. And if this 76.4 is above 500, I'll feel way better. Yeah, okay, there we go. Come on down. So the 76.4% retracement of that move puts us 501. So let's basically call it 500, right? So that's really where the resistance is, the 500 level. Okay, that makes sense. Support downside 450s, the first level. So we're going to tighten this up a little bit then. All right. Back to here. 470. Now you guys know me. You know what I like to do is I'll take kind of what the market's pricing in, and then I'll look at what half of that looks like, right? Just price in half of that move. And the reason being is because oftentimes you're adding additional risk by going out, the 470 to the 495. You're adding additional risk, but your payout isn't that much better. So in this case, real quick, guys, just eyeballing this so I can show you something quick, is long the 470. Oh, come on, bar chart. Killing me. Killing me over here, bar chart. Look, they automatically put me back here, too. Their refresh. Their refresh, man. Killing me. Killing me. Okay, here we go. 470s. And I first want to price this 495 to show you guys this. So it's 1665 would be long the 470s, and then you get back 7 25. So you'd have 940 at risk. And the difference in the strike prices is 25. So actually, I guess that's not too bad. Minus 940 divided by 940, talking 165% rate of return, right? Now let's compare that. And again, guys, I'm going through these numbers kind of fast because I'm just showing you sort of my calculations as I'm, we're doing this live. I'm looking at this the same way. I bet you could get, now, whenever bar chart has a little NA here, I'm like kind of worried about it, but kind of not, right? Because I feel like you can still get filled there, no problem. 1665 minus 1115 is 550. Now the difference in the strike prices here is 750. Is 1250, right? So here we got 1250 minus 550, $7 divided by the 550. You can make 127%. So I know I did that kind of quick, but I was trying to prove a point here and show you guys that doing the 470, 482.50 call spread is about 127% potential rate of return, whereas adding this additional 1250, which is essentially adding risk, gets you 165% potential rate of return. But when you compare the two of those, that's only 38%. So what you have to ask yourself is, looking for this much of a move worth 38%, where the move from here to here is worth 127%. Right? So you have to ask yourself, is this additional risk worth it? And I'm going to say no. So I'm going to just do half of that move. So officially, the bull trade is long the May. This is going to be May 19th, right? Where's Bruno to correct me? May 19th. So long the May 19th, 470, 482.50 call spread for a 550 net debit. Right? Okay, so that's the bullish trade. Now let's go back to the bearish side of things. And this is where I basically said 450s it could unwind to. Market's pricing in a little bit below that. So the market's kind of down over here somewhere, right? I said 450 seems pretty logical. We're going to do the same thing where I'm going to do half of this move and price this out. So in this case, going long the 470 put is going to cost you $15.30. Simultaneously selling the 460 put, you're going to get back $10.80. And here it is, $450, right? So this one we can get $450 as a net outlay. Upside potential is $550, right? So $550 divided by the $450, 122%. So is there really... Now, bar chart's saying there's no open interest, or there is no open interest. I would love to open up E-Trade right now and put something together, because I'd like to see that. Because normally, if bar chart has these values, that means there's a market for this, and there's somebody on either side. So the market maker will take care of you all day in between here. Okay. So yeah, so if you want, guys, obviously you could do the 470, 480. Absolutely. You can do that if you want. Okay. I'd like to see, that's part of the problem here that I'm, going on bar chart here. So I have to kind of sort of trust their data, but I don't trust their data at the same time. So yeah, so if you're more comfortable doing the 470, 480, go right on ahead. All right. So back to what I was talking about here before I was interrupted. Along the 470, 460 put spread here on Chipotle. So that's my bearish trade. So bear, long 15, 30, along the May 19th, 470, 460 put spread for 450 net debit. Okay? That's the bearish side. All right. Now, why aren't we selling? Because I think the stock's going to move more than the market's pricing in. That's why. Okay. So that's why, guys. All right. Now, what I've been doing in the premium streams is I've been giving you like a credit spread and a debit spread on each side, right? So I've been giving a lot more trades in that. And that's something I'm going to continue to do, I think, there. Because it just makes more sense. Because there's a lot of you guys out there that don't like going long. And there's a lot of you guys out there that don't like going short. So, or don't like doing credit spreads and don't like doing debit spreads. There's basically, it's like 50-50 on each side. So I think I want to try, I'm going to do that, continue to do that during the premium, the paid streams. We're not in a paid stream here, so I'm not doing it. All right. But what I will do, though, is we'll look at a Lotto here. And so this one is going to be sort of the higher risk thing, right? Higher risk trade here. Now, the technicals are bearish on Chipotle, but just a little bit. And they're not bearish. This is the weird part about a technical chart is that you're always on the cusp, right? So as this commodity channel index is approaching the zero line, and as this is approaching the zero line here, you're right on the cusp of like it breaks that, now you're super bearish, right? But I've seen 1,000 times where this indicator will come and bounce at the zero line and then push higher, okay? I've seen it over and over again. That's one of my favorite patterns to actually trade is a stock that's running, was overbought, comes down to the zero line, boom, and I buy it there. I do that a lot in Momentum Trader, and we make money, okay? So let's flip back to my risky business trade here. So you got to be careful because you don't want to get caught like, oh, I'm going to buy like a 450 put and hope it explodes, because the whole point of these sort of lotto tickets are kind of higher risk things that are going to happen quicker, that you're not going to lose your shirt on. And by this going all the way 460, that's a lot of money to roll the dice on something silly, right? If you're bearish, or even on the bullish side, right? This is a lot of money to pay out there. So I think if I wanted to be more aggressive here, and this is what I'll give you guys on a more aggressive trade, is going out of the money on a call spread is probably the way to go if you're going to be super aggressive. So you could do like the 480, 490, right? Call spread there. So that's if you think Chipotle is going to have a magical report and shares are going to surge higher, okay? It's going like the 480, 490. Because look at how this one prices out. So now you got the potential to triple up on this. Because you can go long the 480, it's going to cost 435. And then simultaneously short the 490, it's 605, right? So you got 330, that's your net outlay. the amount of money you're going to have at risk here is that 330. Your upside potential is 670 on that 330, right? So we could triple up on that trade. But Chipotle would have to get all the way past 490 for you to do it. But in terms of lotto tickets, this is probably the cheapest lotto ticket that's available here on the Chipotle chart, okay? Or in the Chipotle chain. And yes, I see you guys in the chat. High implied volatility, so we really should be selling the spreads, right? Last I checked, every one of these call spreads that we're putting on or put spreads that we're putting on, we are simultaneously selling an option also, right? So we're not completely ignoring the implied volatility in any of this. So there's that. But I think that the market's going to move more than 5%. So ultimately, when I make my decision on if I want to go with a credit spread or a debit spread, it ends up being all about how much the market is expecting it to move. And so if I think the market is going to outpace it, then I usually go on the debit spread side. If I don't think the market's going to do as much, then I go with the credit spread, okay? And then during our premium feeds, I give you guys all that anyway. Anyway, so personally here on Chipotle, I think it breaks through just because everything's been breaking through in this market, and I'm very actually cautious about this one. I mean, let's say my conviction on this is pretty weak, right? But I do think it breaks higher. Had a good report out of McDonald's here. This is a turnaround story on Chipotle. You've had some buying pressure, some accumulation here ahead of this earnings report. Does somebody know something? Does a big institutional money know something, right? So that's the way that I'm leaning. I'm leaning bullish rather, on Chipotle. So I'm going with the bullish side of this, and that's what's up on this glorious Taco Tuesday. I think going with the 470, and I guess you guys said there's no open interest at 480, 250. So even the 470, 480, you could do that. I'm going to see if I can't get any love on this 480, 250 though. So that's officially what I'm going to put in my GBU. But I'll address whatever else you guys want me to address in that. Okay, fair enough? All right, so that's about all I got for you here today. Remember, tomorrow we're going to be doing PayPal. Thursday, Amazon and Starbucks. And then Friday, Apple. And we're going to do the morning after, the live Q&A on Friday morning. So if you guys aren't already hooked up on Zach's Live Trader Premium, shoot me those emails, livetrader@zax.com. Make sure you get connected with us there so that you get access to all the premium content we have available on Zach's Live Trader. So, and feel free to shoot me emails arguing with me about what you think was a better position to put on, because I like seeing that too, guys. If you want to be more on the bearish side or bullish side, just let me know. Shoot those in the emails, and we'll go from there. So I want to thank everybody for coming out with us here on Zach's Live Trader, and I will talk to you all tomorrow, my friends. Have a good one.